A warm welcome to all the students out here. Today we are starting our new chapter, that is for the foundation course, that is chapter Inventories, which is one of a very important and very crucial chapter. Students, I would like to tell you one thing, that in this chapter we always receive a question. 80 to 90% of the time we receive a question, maybe of 5 marks and 10 marks. And this chapter is again not only important for your foundation exams, it is important for your future examination also. At the inter level you will study accounting standard 2, which is based on the inventories itself. And in fact, after becoming a chartered accountant also, you'll many times you'll see how to value the stock even if you are going into an industry. So this chapter is of a prime importance. At this stage you should be very focused, very thoughtful, and be attentive. Whatever teacher is explaining you should know about that. We have our new special faculty, CA Surya Lakshmi. Very warm welcome to you, ma'am. I'm sure you will be able to deliver the best for this chapter and you'll be able to give justice to this chapter. And our students are eagerly waiting for your valuable inputs, and they'll reap the maximum benefit to you for it. Thank you so much, ma'am. So over to you.
Thank you. Good morning, students. Yeah. So today I am here to, deliver this lecture on inventories. So before we start, I just wanted to know anyone who can, answer what is an inventory. So people can unmute themselves and then answer. What is an inventory?
You can raise your hands. Everyone can raise your hands and then answer. This is a very small and very normal question. Yes.
Yeah. Okay.
Tell Mr. Kashif. Suryaji, we have to give them an option to unmute. If you see from your screen, you can give them an option to unmute.
Okay. Yeah.
Yes, Kashif, please tell.
Yes, Kashif?
Okay, the other person.
I'll unmute.
Hello.
Yes.
Good morning, ma'am.
Morning.
Inventories are the raw materials or finished good that the business holds with themselves for the future production or sale.
Okay. So do you think there is any difference between an inventory and a fixed asset, or both are same? Can we call inventory and fixed asset as same? Are these
No,
two
ma'am,
same?
because inventory can be used in sale and could be converted into cash instantly, but fixed assets mostly cannot be liquidated with ease.
Yes, right. So, the name itself suggests inventories are definitely used in your ordinary course of business, right? If you look at the definition or the meaning of inventory also, it is mostly used in your business, which means what? Suppose, let's take an example of a business. Uh, you know, uh, Voltas company is manufacturing ACs, right? So what happens to Voltas company? These ACs, whatever they manufacture, are their inventory. It is not their fixed asset, right? Why it is not their fixed asset? Because they are going to sell those ACs, air conditioner, to the customers and make revenue out of it, right? So they are making revenue out of this business. They're using that inventory and making revenue out of it. That is why it is called an inventory. Now, if you look at a company which is normally just running some business, some sort of business, and in their office they must have an air conditioning ACs. Everybody in their office have ACs, right? So for them it is a fixed asset and not an inventory. I think you understood the difference, right?
Yeah,
A business, a business which is using those products for selling it, reselling it, or using in their process or production, then that will be called as an inventory. But if they're using it as part of their business, not for reselling them, then it is a fixed asset. So every business, there might be different inventory. Inventory will change from business to business. Every business will not have the same inventory. Every business will not have the same fixed asset also. We should first of all know the difference between the inventory and the fixed asset, because many people, mix these two. We are confused with if it is an inventory or a fixed asset. It changes or depends from business to business. If it is a business which is actually doing the same thing, if it is actually producing them and selling them, it is an inventory for them for sure. So the meaning of the inventory says that it is for sale in your ordinary course of business, which means in your regular business, if you're trying to sell them, then that is an inventory. That's the first meaning of inventory. And the other one is it is used in the process of production, which means you are using a raw material. What are raw materials? Suppose for AC, you will need some other raw materials, right? Whatever parts we have in that air conditioning, whatever it is, raw materials. And those raw materials are converted into WIP. Once it is work in progress, then you do the process and then finally change it into a finished good, which is your AC or whatever product it is, right? So this is the process that goes in. Now, if any material or any sort of products are used in this process, it is still called an inventory. That is one of the definition or meaning of inventory. And the other one is consumption. If you're using it as part of your consumption. Now, when you're doing this process or production, you will need few spare parts, right? All those such, if you need a packing material, all those are also called as inventory. So in a broader sense, whatever raw materials you're using, whatever you're using in your production, whatever spare parts you're using, all these will be coming under your definition or meaning of inventory. But these are for resale. You use it in your process, production, whatever it is. But finally, the ultimate goal is to sell. You have to sell that product and make revenue out of it. Then only it is called an inventory. I hope I'm clear with what is an inventory, meaning of inventory, and no confusion between what is inventory and what is a fixed asset. Fixed asset is completely different when compared to this, right? Some are raising hands. Yes, Harsh Vishwas, you are asking something?
No, ma'am. I'm clear.
Okay. And Hussein, you have something to ask?
Sorry, ma'am.
You have something to ask? You raised your hand, no? Okay. I'm moving on. Since now we understood what is an inventory, but why are we learning this? Why do we have to know what is an inventory? What is the meaning of inventory? Why do you value it? All these things. Why are we learning this chapter, first of all? We need to do that, right? So, okay. This, like I told you in a broader sense, what is an inventory? Now, these are the types of inventories that we have. If you look at a manufacturing concern, what are manufacturing concerns? Which are nothing but they use the raw materials, they manufacture the product, they deliver a finished good and sell it to the customers. That is the manufacturing. They do the entire manufacturing process from start of the raw material to the finished goods. But if you take a trading concern, they don't manufacture anything. They don't have raw materials in their hand. They don't have any work in progress or anything. They directly buy the finished goods, which are also called traded goods. So finished goods are directly purchased, which means what happens? I have a supplier. Now, from this supplier, I will buy 100 units of finished goods. What am I going to do? I have purchased it for maybe 1 lakh. Now, after I purchase this from my supplier, I will sell it. Am I going to do any process to this? No. If you are a concern, mostly you doesn't do any other additions to that product. Mostly no, right? So you sell it to your customer. When you're selling it to the customer, you add a profit component to it. Let's suppose I'm selling it for 1,20,000. Now, what happened here? Did you do any manufacturing here? No. Did you add any process to it or did you make any changes to the product? No. The product was directly purchased from the supplier and sold to the customer, but you added a 20,000 profit to it. It is because it is business. You have to run your business because you're bringing it from suppliers location to your location, and then from this location to the customer's location. You keep adding some profit and then you sell it. Did you do any manufacturing or any work in progress or any raw materials are added? Nothing. This is called a trading concern, where traded goods are completely purchased and sold without involvement of any of these raw materials and nothing, right? Now, what happens in manufacturing concern? Like I told you, you will have to purchase the raw material first. So raw materials are purchased. And what do you do with this? You process them, right? You put it into a machinery, or you add some other different kinds of raw materials into one particular machinery, do the process, then it becomes work in progress. When it is called work in progress, when it is not a finished good, which means if the AC is not completely ready, right? You have a raw material, the parts are differently there, and suppose I'm using 4 parts for manufacturing an AC, right? Now, all these 4 parts, different parts, are called raw material. Now, once these are there, these are like raw materials. You try to assemble them. For a air conditioner, it is mostly assembled, right? When you're trying to assemble them, when it is not completely ready, then it is called work in progress. But once all the assembling part is done and the AC is working in working condition, then it is called a finished good. Right? So there are differences between the stages: raw materials, working in progress, finished goods. And like I told you about stores and spares, we have to use some spare parts, right? In any product, spare parts will work. For machinery or any product, you will have to use some spare parts. So that's one thing which is also part of your inventory. And also the packing material, because packing material is also one thing. Without, if you don't pack goods and sell it to the customer, do you think AC can be just sold, the machine directly? Can you throw it to your customer and say, this is your AC? No, just purchase it. That cannot be done. You'll have to pack it in a proper box with lot of support that it is not damaged. If it is damaged, again, it's a loss to the organization. So packing material is also a part of your inventory, right? So if it is a manufacturing concern, the inventory types are different. And if it is a trading concern, the inventory types, it's just one type. There are no different types in trading concern. It is just one product which is purchased from your supplier and sold it to your customer, right? So these are different types of inventories that we have seen. Now we understood what is the meaning of an inventory, wherein what are involved, or what does an inventory do, right? How is it used, and what are the different types of inventories we can talk about. Now, this is just an example I wanted to show you. Like, you have different types of raw materials wherein it is converted into work in progress. If you see, this is the cloth and the threads that we have. We use this machine, then convert them into a cloth, right? This is like the finished good that we have, and this is the raw material we have. And WIP is like what is the process that is done in between. Now, if you look at the flour, then you put it into a baking machine and it is converted into a chips or a bread, whatever it is. These are finished goods. These are like some tools that you use to build a house, right? This is again a finished. So, the raw materials are put into a process and then they are converted into a completed product. Can you sell this? Can you sell this house? We can't, right? I mean, when it is in construction, it is impossible to sell. But if it is a finished good, you can sell them. Mostly work in progress cannot be sold. In very few instances, it is a different case, but mostly work in progress goods are not sold. Only finished goods are sold, right? So we are trying to bring raw materials into a finished good or a completed product to sell it and generate revenue out of it. This is just an example I want to show you. Yeah. So I was talking about why we are doing this inventory and why we have to learn about inventory and all, right? So here are a few reasons why we have to know what is inventory, why we will have to do inventory valuation, and why is it important? So important, like ma'am mentioned, it is like the important chapter which will, you will have it throughout your life. Inventory, you cannot skip. You'll have it in your foundation, you will have it in your inter as an accounting standard, and in your final as well. You'll not have it as like specific things, but it is included everywhere. It is included everywhere. You can't skip inventory. right? So here we will see the reasons why it is important to value inventory, or why are we having this inventory in our books of accounts. Now, if you look at the first reason, it is determination of income. What is determination of income? Do you think it is involved in income valuation or income calculation? And again, I'll pause. Anyone wants to answer how it is included, or how it is, determining the income? Anyone wants to answer? Yeah, I've unmuted you. You can answer more.
Um, Hi, ma'am. The reason I think inventory evaluation is important determination of income is because your inventory is a part of your income because you will sell it in the future, so you will earn revenue out of that inventory you have. So in total, that the inventory that you have will be part of your income as a whole because you will sell it and then earn revenue out of it.
Earn revenue, right? So
Yeah.
if you look at you might be having your trading account. You must have seen your trading account and all those things, right? So we will take an example. Give me a second. I hope you can see my whiteboard.
Yeah, ma'am.
Okay. You all know what is a trading account? Trading and profit and loss account. You might have done your final accounts with this trading account,
Direct
P&L account, and
expenses
then
and
yes, balance sheet and all these things you must have done. And I know a few people must have done. If you are not having a commerce background, you might not know what is a trading account. But then you have your final accounts in your foundation, so don't worry about it. But generally, I'll just tell you what is a trading account. Trading account is nothing but it will try to determine what is the gross profit out of the manufacturing process that you're doing. It will consider the opening stock, closing stock, the sales that you have done in that year, the purchases that you have done in that year. Using the opening inventory, closing inventory, the purchases that you have done, sales that you have done, you will determine what is the gross profit for that year. That is trading account. And P&L account is again different. We'll not go there. Right now, we'll look at what is trading. So what are included in trading account? Anyone? What are included?
wages.
Okay, wages.
Then you have the manufacturing main expenses.
Purchases, sales, purchase returns.
Okay, manufacturing expenses are included. You're not telling me the main one. What is the main one?
Ma'am, purchases, sales, purchase
Purchases,
returns,
right?
sales
Okay.
returns, opening stock,
I'm
closing
opening
stock,
inventory.
Hey, opening stock
closing
and
stock,
okay. Where does closing stock come, by the way?
credit side, ma'am, buy closing stock,
Okay, correct.
sales returns,
Sales comes on the debit side or credit side?
credit side, ma'am, because it's their income.
It's an income. Very good. Why are purchases coming on debit side? Because it is an
It's
expenditure, right?
expense, ma'am.
Yes, great. And these are also expenses. Now, can we include selling and distribution expenses here? Selling and distribution expenses on your debit side here. Can we include? No, it is definitely a no, because selling and distribution expenses comes under your P&L account. Because those are mostly used for selling and distribution. Means you want to sell the goods, those expenses are incurred for selling, right, which will not come under trading account. It will come under your P&L account. In trading account, you will only look at the expenses that are required for your manufacturing. Now, manufacturing expenses is something which is like the expenditure that is needed, without which you can't complete your sale. So this is needed. Wages are also something which are needed, right? So like raw materials, the labor which are needed for your production and manufacturing the product to sell them are only included in your trading account. Now I will categorize these as direct expense. Okay, I'm just using the word direct expense. This is one thing I'm using. So can I, put this into a short form? Like not a trading account, because we keep using that formula regularly. I am going to put it into a short form. What is COGS? What is COGS? Anyone wants to answer?
Cost of goods sold.
Cost of goods sold. Okay. So now what is the formula for this cost of goods sold? Cost of goods sold will include your opening inventory, and you add purchases to it, and you also add your direct expenses, and you remove your sales at right? So I didn't use anything that is new. All these words. We have, done that in the trading account. So whatever is there in the trading account, I've used opening inventory, I've used closing stock, I've used direct expense. So, and also purchases, right? So only these are used for calculating your cost of goods sold. So the formula for cost of goods sold is opening inventory plus your purchases, plus if you have any other direct expenses, only direct expenses. Like I told you, no P&L expenditure, only trading account expenditure. Then you will remove your closing inventory. This will give you cost of goods sold, right? Now, when you're determining cost of goods sold, what do you do next? Our ultimate thing is to arrive profit, right? So I will also this one. Sale minus cost of goods sold will give you gross profit. And what is included in cost of goods sold? Your opening inventory, your direct expense, your purchases minus your closing inventory. So all these are included in your cost of goods sold, right? So when you're determining your gross profit, inventory is such a thing that without this, you can't determine the exact gross profit. That is for sure. Without inventory, you will not arrive at gross profit accurately. Accurate profit will not come, because only if you know what is the inventory that is being purchased, or what is the inventory that is being available at the beginning of the year and the end of the year, only then you will know what is the profit, revenue that you have generated and profit that you have earned. So inventory has such importance, right? Now, like I was mentioning, I'll go back to PPT. Yeah. So I was mentioning about the COGS formula, right? Opening stock plus purchases plus direct expense minus closing stock. This will tell you how important the stock or the inventory is when you are doing the inventory valuation or when you're doing the gross profit calculation. But can you see this table here? This has some, green arrows, red arrows, and so many things, and which says overstated, understated, and all these things. So we'll look at what is this through an example, right? I told you about sale minus cost of goods sold, which is giving me the gross profit, right? Now, let me take an example. Let us assume and cost of goods sold, opening inventory is some 2,000 plus some, I'll take purchases of 3,000, direct expense of 1,000. This is giving me 235 and 6,000 minus some 3,000 of closing inventory. So this is opening inventory. This is purchases. This is direct expense. I'm writing in shortcut because you all now, by now, you know what is that. So I'm writing in shortcut. Closing inventory, right? So opening inventory is 2,000. Purchases is 3,000. direct expenses are 1,000 and I have a closing inventory of 3,000. Which what is the cost of goods sold now? 2,000 plus 3,000 plus 1,000, which is giving me 6,000 minus 3,000. So it is 3,000. Right? The gross profit that we have for the year is 7,000 as per this example. We are done. Now, I will retain all the numbers. I will not change all the numbers except one number. Okay. So let us change the opening inventory. I will increase the opening inventory. Maybe I'll do it 4,000. Opening inventory, I'm changing it to 4,000 plus 3,000. The rest all numbers will remain same minus 3,000. Now what is the cost of goods sold? 4,000 plus 3,000, 7,000, 8,000 minus 3,000. So it is 5,000. Okay. So my gross profit is 5,000. Done. So what has changed here? Opening inventory has changed. Only the opening inventory has changed. Now let us take one more example. Then we will compare. Minus cost of goods sold, which will give me gross profit. Now I will change my opening inventory. Before here, what did I do? If it was 2,000, then I have increased it to 4,000. Let me decrease it now. I'll decrease to 1,000. 3,000 plus 1,000 minus. Rest all numbers again remain same. What did I change? Only the opening inventory I have changed. Right? So what is the cost of goods sold now? 1,000 plus 3,000 plus 1,000 is 5,000 minus 3,000, 2,000. This is going to give me 8,000, right? Now, if you look at this example, what happened here? What happened here in this example? When the opening inventory was 2,000, you had a gross profit of 7,000, right? And when your opening inventory has increased to 4,000, your gross profit decreased, right? So this is having an inverse relation. Can we say this as inverse relationship? Yes, inverse relationship. So when your opening inventory is, increasing, or when you are trying to overstate your opening inventory, overstate means what? You're trying to increase wantingly, or you didn't know that there was a mistake, or wantingly also some people do it, right? I wanted to show less profit. Why do people wantingly do it? Because I wanted to pay less taxes. I will show less profit. Some people have that intention, or some people have an intention to show more profit, to attract more um, stakeholders or investors. They try to decrease the opening inventory. When you're trying to decrease opening inventory, what is happening? Your gross profit is increasing, right? So this is having an inverse relationship, wherein if the opening inventory is increasing, gross profit will decrease. So what is happening? If opening inventory is increasing, gross profit will decrease. If opening inventory is decreasing, your gross profit or profit, right, will increase. This will have an inverse relationship. That is what this example proves you. Did I change any other number? I did not change any number. I have changed only that single inventory figure, opening inventory figure, to prove how the gross profit is moving upwards or downwards. That is what they're trying to tell you here. If you look at this, what are they saying here? Only look at this opening inventory statements. Opening inventory is overstated, then your net income or your profit will be understated. If your opening inventory is understated, then your net income or your profit will be overstated. So it is having a inverse relationship. Just look at these two. So we are done, right? Now let's move to the closing inventory part. We'll also take that example and see how closing inventory also has an effect. I'm taking the same example, but just changing the closing inventory, right? What was our initial opening inventory? 2000. Let's take that. It was 2000 plus 3000. And then we also had direct expense of 1000. And we had a closing inventory of 3000. That I'm going to change. Okay. 3000, I will make it as 5000. What did I do? I have increased this. Okay. Now, how will your gross profit change? So 2000 plus 3000 plus 1000 is 6000 minus 5000. So your cost of goods sold is 1000. So your profit will be 9000. Okay, we are done. Now let us also take one more example and then finish this. Cost of goods sold. And then you have your gross profit. Okay. So I'm again changing only closing inventory. I'm not changing anything else. 1000. Now I will just take. Now what is the answer? 2000 plus 3000, 6000 minus 1000 is 5000. Okay. Now let us again compare. If your closing inventory initially was, what was our closing inventory? 3000. If that closing inventory is increasing, your profit is also increasing. If your closing inventory was 3000, your gross profit was 7000. Now, if your closing inventory is 5000, your gross profit is 9000. So both are increasing. If closing inventory is increasing, gross profit is also increasing. So if closing inventory decreases, gross profit also decreases. That is proved in this example. I have decreased my closing inventory, my profit also decreased. Previously it was 7000, now it came down to 5000. Right? So this will have a direct relationship. So one is increasing, the other one also will increase. If one is decreasing, the other one also will decrease. So that is what is given here. If you look at this closing inventory, if it is overstated, net income or profit also will be overstated. If closing inventory is understated, net income also will be understated. It is having a direct relationship. That is what is this table trying to prove you, how determination of income, or how the profit or the income is changing because of inventory is what we are trying to prove in this example. If one is overstated, how is the other one being affected is what we are trying to look in this example. Right? I hope I'm clear. I'll just pause. Any questions till here? Any questions? Anyone can raise their hand. Yeah. Yes, Shamri. Okay. No questions. Sandhya, you have a question to ask?
Yes, ma'am.
Yeah.
Ma'am, if the closing stock is more, then we can assume that sales have been goods have been sold less. Like that, it will be in.
If the closing stock is, let me go to this trading account. So you're saying this, if this closing stock is?
If sales are more, closing stock will be less, no, ma'am.
Yes. I mean,
Then
it
profit
depends, right? It depends on purchases also, no? We can't directly say if you have more sales, then closing stock will be less. It also depends on what is the opening inventory that you have and what are the purchases that you have made in the year, right?
Yes, ma'am.
Because
Yes.
with the opening inventory that you have in your hand by the end start of the year and whatever purchases you have made, out of these two only you will make sale. Agreed?
Yes, ma'am.
After sale is made, whatever is left over is called closing inventory. So you can't directly say if the sales are more, closing inventory is less, or something like that. But then it completely depends on what is your opening inventory and the purchases you made in the year. Then after the sales, whatever is left over will be your closing stock.
Yes, ma'am.
Sure? Here?
Yeah, ma'am.
Oh. So one reason that we have seen here why inventory valuation is important, or why we will have to do the inventory valuation, it is because it directly affects your income, or it directly affects your profit. That we have seen through an example, and also this formula, cost of goods sold. Now, the other second reason is liquidity analysis. Maybe I'm not sure if you have learned all these formulas of net working capital. Have you heard this net working capital, which will consider current assets and current liabilities? So how do you think this affects your how inventory is affecting your liquidity analysis? Or let me also take this financial position. Where is the inventory shown in your books of accounts? Kuldeep, yeah.
Surya Lakshmi ji, they are not
Yes.
aware of this because we have started this. So they
Okay.
the session net working capital, you have to explain them that
Okay,
what
fine,
is
fine.
it
Yeah.
and why. Yeah,
Sure, sure, sure. Oh.
yeah.
Okay, I'll move to this since you are not aware of what is net working capital. Let us take that. Now, you must be knowing what are current assets and what are current liabilities, right? So, current assets means if it is an asset which will be for less than 1 year, then it is called as a current asset. And current liability also the same thing. If it is used, or if you have to repay back your liability within 1 year, it is a current liability. And if you're using that asset for less than 1 year, or if you'll receive, suppose it is a receivable from a customer and you will receive it within 1 year, then you categorize it as current asset, right? Something that is received or something that have to be paid within 1 year, you categorize them as current asset and current liability. And non-current means for more than 1 year. If it is now, let's take this building and furniture and all. You use them for more than 1 year. That is why you categorize them as non-current assets or fixed assets and all. And non-current liability is also same thing. If you have taken a bank loan for 10 years, that's definitely a non-current liability because you have to repay back after 1 year, or I mean, you have to repay back more than after 1 year, or after for more than 1 year, right? It is for 2 years, 3 years, or so on. That is called a non-current liability. Now, in this current assets, you will also have an option to show inventory. So inventory is placed in your current asset. Why is inventory placed in our current asset? It is because this inventory is assumed that it is sold within next 1 year, right? That is why we are assuming this as an inventory. Inventory is part of your current asset, which means it is shown in your balance sheet. One adjustment is that it is shown in your balance sheet. What is the other adjustment? It is shown in your credit to trading account. This we have seen in this previous example. When we were doing this example, this trading account, where is this? Yeah. So closing stock inventory is shown here, right? So that is one adjustment or one part of inventory. Every transaction has two effects. We know that, right? It is a double entry system wherein any transaction will have two sides. One is debit and the other one is the credit. So two adjustments have to be done. So one adjustment that it goes to trading account as a credit, and the other adjustment is balance sheet as your current asset. Why is it a current asset? Like I told you, inventories assume that it is sold within 1 year, because you don't keep those inventories for a longer. Nobody wants to keep it for a longer period, because once inventory is stored for a longer period, it is becoming obsolete. Because technology can change or anything can change. People are not ready to buy older stock, so we try to keep the stock and sell it as soon as possible rather than keeping it for a longer period. So inventory is categorized as, so like I told you, these two are the adjustments for inventory. Now inventory is coming under your current, correct? So how is this affecting your liquidity position? That is what we were discussing. The point was that how is it affecting your liquidity position? Now there is this formula called current ratio. I'll tell you what is current ratio and net working capital, these two things. What is a net working capital? This will be your current asset minus current liability, which means what? Any capital, right? You will have this capital. Capital means what? The investment that you have made for running your business. When you start your business, you introduce capital and start your business. But what is net working capital? It is not like your capital that you have introduced in the beginning. This capital is something which comes out of your current assets and current liabilities, which means I pay out my liabilities, current liabilities. Suppose I have a bank overdraft, that is a current liability, and I have some receivables, I have some payables. So there are few current assets and current liabilities, cash and all those things. Let me show you. I have cash, I have receivables, I have payables. Payables may have bank loan, and then we can have bank overdraft also, right? And then you will have inventory here. Now,
Ma'am, I would like to, just pause in between. Please use a bit Hindi because we're receiving queries that student bit Hindi. You can just translate something in Hindi for our students sometime.
okay.
Yeah.
That is difficult, but I'll try.
Yeah, okay, you're not comfortable with Hindi?
No, not that much. Maybe I'll try.
No, thoda bahut, not much. Maybe just
Okay.
translate few of the things. So that way.
Okay. Oh, yeah. So these are current assets and these are current liabilities. Like I have taken few examples of current assets and current liabilities. Now, you will have to pay your payables. Payables are nothing but something that have to be paid to your suppliers, right? And then overdraft have to be paid to bank. Now, after paying these, how will you pay these? You will use your cash and the receivables. Receivables are from your customers. You sell it to your customer and customer will pay. So you will use this amount, and inventory, if it is sold also, you will generate some. So all these amount, whatever you have received from your current assets, are used to pay your current liabilities, whatever current liabilities you have. Now, after all your current liabilities are paid off, now so let's assume this is some 10,000 and you have some 18,000 of current assets. I'm just taking an example. Now 10,000 you have paid off. So what is left now? 1,000, right? This is called net working capital, which means after you pay off your current liabilities using your current assets, whatever is left, something that is left in your hands, will be used in your business. You will use it in your business to run the business. Now, working capital is used for what? I will have to manufacture something. I will have to purchase some raw materials. I will have to do the process and all. How do I do? When you're doing the regular process, you will need some income daily. Routine for your routine business, you will need some amount to run the business. That is what is net working capital. But how do you derive it? The formula is current asset minus current liabilities. It is assumed that after all the current liabilities are paid off, whatever using the current assets, whatever you pay off, whatever is left in your hands, that is something called as net working capital, right? Now, this is done. Let us move to current ratio. What is current ratio? It will be current liability. I'm just giving you the formula. Right? Now, same thing. Current asset minus current liability is working capital. Current asset by current liability will give you current ratio. Right? Now, looking at these two things, what do you understand? Inventory is playing a major role. Inventory is definitely playing a major role. When you're determining working capital, inventory is involved. When you're determining current ratio, inventory is involved. But why do you need current ratio? That also, let us see that also. Suppose for a bank loan, okay? When you go for a bank loan, the banker will look at what is your current ratio. He will ask you how much current assets you have, how much current liabilities you have. Or when he's looking at your balance sheet, he will ask you what is your current ratio. Looking at current ratio, he will decide, are you capable of paying your current liabilities? Because in the same example, let's assume my liabilities are 18,000 and I only have current assets of 10,000. Do you think, can you pay off entire 18,000 with this 10,000? That is impossible, right? I have a debt or I have a liability of 18,000, but the current assets that I'm having are only 10,000, which means I am in deficit. I'm not even able to pay back my liabilities with the amount that I have. So who will give you a loan? How will banker think, can I give OD? The banker will think, he's not even able to pay whatever is there with him in his balance sheet, how do you think he will pay the extra loan that he's going to take? Right? So that is affecting your bank loans or whatever it is. Even the investors, when they look at the current ratio, they will think that you're not able to pay off your liabilities. How will you give their money back to them being an investor, right? So that is current ratio, which is mostly used for determining how your liquidity position is. That is where I told you about the liquidity analysis, wherein it talks about how liquid are you, how are you able to pay back your liabilities with the assets that you have. Your liquidity position is determined, and inventory plays a major role in that liquidity analysis. And also the financial position, because it is part of your current asset. Inventory is definitely part of your current asset, and also in the form of trading account. So which means trading account, you will determine profit. And where does the profit go? Profit goes to your balance sheet again. So it is affecting your financial position in the form of current asset and also in the form of profit. So your liquidity and your financial position are completely, I would say, it's not the only part which affects the liquidity and the financial position. Inventory plays a major role in determining the liquidity analysis and the financial position. So these two are again the reasons why inventory is very important. And the last one is statutory compliance. Statutory compliance is nothing but we have this Companies Act 2013, which will give you Schedule 3. So what is the Schedule 3? The Schedule 3 is nothing but it will, give you a format of how your financial statements have to be prepared. What are the inclusions or exclusions, or what is the format that you will have to follow? What are the classifications that you have to do? Everything is given in your Schedule 3 in the Companies Act 2013. Now, as per this statutory compliance, it will tell you that you will have to determine different classes of inventory, like we have seen before: raw material, work in progress, finished goods. All these classes of inventories have to be separately shown. They have to be separately valued and separately shown in your financial statement. So that's the statutory compliance. You can't blindly say, I just have inventory, and inventory is 10,000 or 20,000. You'll have to clearly show the raw material, the finished goods, or whatever classifications you have. You have to classify them properly and show the value of each one of them properly. So that is statutory compliance. That is why inventory valuation is important. You can't randomly say the value, right? You will have to have a base of telling it that this is the calculation, or this is what is the value that I have determined using this formula, or this method and all. These are the 4 main reasons why inventory valuation is important. I'll pause again. Then, any questions? Sarala. Yes, Sarala.
Ma'am, good morning, ma'am. I
Yes.
just wanted to know what is the ideal, current ratio? What's the ideal percentage?
As per the industry norms, anything more than 1 is ideal. More than 1 is ideal. More than 1 means what? Suppose, given this example, you have current assets of 10,000 and current liabilities of 10,000. This will give you 1, correct?
Yes, ma'am.
Current assets by current liabilities, if it is more than 1, it is good. More than 1 means what? You must have had more of your current asset. Let's suppose it is 12,000 by 10,000. Then what is the answer? 1.2. This is good, right? Because you have more of your current assets and you can repay back your liabilities and still have some surplus. So anything more than 1 is ideal. Sometimes they say 2 also. Having 2 times more than your current liabilities is ideal, is what they say. Industry norms, as per industry norms.
Okay.
But anything more than 1 is fine, because you're still able to repay back and have some surplus. It is fine.
Okay. Thank you, ma'am.
Yeah. Okay. Anyone else? Any other questions? Still here. We just started off the meaning of inventory. Then we looked at the types of inventories that we have for manufacturing concerns and trading concerns. And then we also saw why inventory valuation is important. We didn't do the valuation till now. We didn't see how you will have to value the inventory. We just have seen what are the reasons why we are doing the valuation, or why it is important. Yashi has some question. Yeah, Yashi.
Hello, ma'am. Ma'am, can you explain statutory compliance in Hindi?
Oh, can you be a little louder? I can't hear you.
Can you explain it in Hindi?
Which one? Which one you want me to explain again?
Statutory compliance in Hindi.
Statutory compliance. Fine. Yeah. Statutory compliance, it's like that will just tell you that what is there in your Companies Act. Companies Act 2013 has given you Schedule 3, right? This Schedule 3 will tell you that your inventory should be shown in your current asset. Okay, fine. It has given you a format. There is a format of how you have to prepare your financial statements, and how current assets, current liabilities, non-current assets, non-current, everything have to be shown separately, and what are there in each one of them. Everything is given in your Schedule 3. That is fine. But now in this current asset wherein you show inventory, the statutory compliance says that you can't just see it as inventory and tell them that the value is 10,000. You will have to clearly show in working note, inventory includes raw material, then WIP, then you have finished goods, or any other classifications you have. Everything have to be shown, and the value of each one of them have to be shown separately. That is what is told by the Schedule 3. So the compliance here is what you have to comply. Can you directly say that I will just show the value of inventory in my balance sheet and then just keep quiet? You can't say that, right? You will have to show clearly the classifications. That is statutory compliance. If you don't comply with that, what will happen? That's a different story, right? If you're not complying with Schedule 3, then you will be, if you're not following as per Schedule 3, that's a different story again. So compliance, Companies Act is very important, and you do according to whatever is mentioned in Schedule 3 as per Companies Act is what is statutory compliance, which means complying whatever is there in the act is also important, right? There are a few people who are raising their hands. Yes, Megha. We have Visual Aurora also. You want to ask something? Akshit?
Hello, ma'am.
Yes, Akshit.
मैम लिक्विडिटी एनालिसिस आई वो हिंदी में समझा दो.
Liquidity is a little difficult thing for me. Okay. You understood what is liquidity?
वही मैम इंग्लिश में समझ में नहीं आया इसलिए ये हिंदी में समझ.
Okay. ठीक है. लिक्विडिटी मतलब क्या है? लिक्विडिटी मतलब क्या है? When someone is asking you liquidity क्या है? When you are talking about, yeah. ओके, सो लिक्विडिटी मतलब ये है कि हमारा पास क्या है, हमारा पास एसेट्स है और हम लाइबिलिटीज को रीपे करना है यूजिंग एसेट्स. वी हैव टू रीपे लाइबिलिटीज. हमारा पास लाइबिलिटीज मतलब क्या है? हमको बैंक लोन है और हम सप्लायर्स को पे करना है और हम बैंक ओवरड्राफ्ट लिए थे. ये सब लाइबिलिटीज है. प्लीज अनम्यूट योरसेल्फ. So all these are liabilities we will have to pay. मतलब हम पे करना है किसी को, बैंक को या किसी सप्लायर को पे करना है, और कुछ सम पर्सन्स को पे करना है हम, राइट? पेएबल्स और ये सब. और एसेट्स में क्या है? करंट एसेट्स में जो हमको रिसीव होना है, हम कस्टमर से रिसीव करना है पेमेंट, और हमको कैश बैलेंस है और इन्वेंट्री है, ये सब हमारा एसेट्स है. नाउ एसेट्स यूज करके हम लाइबिलिटीज को रीपे करेंगे. वही है. जब हम बैलेंस शीट को देखेंगे, बैलेंस शीट में क्या है? हमको कैपिटल होगा, नॉन करंट एसेट्स होगा, करंट एसेट्स होगा, लाइबिलिटीज होगा, नॉन करंट लाइबिलिटीज होगा. यही होगा ना हमको. व्हाट आर वी फाइनली डूइंग? वी विल हैव टू, हम रीपे करना है ये सब लाइबिलिटीज. किसको यूज करके? assets को use करके. Whatever assets you have, you will have to pay the liabilities using those assets, right? That is what is the criteria, or that is what we generally do. How do you get your amount? हमको कहाँ से आते हैं amount? कैश बैलेंस से या रिसीवेबल से, और कुछ assets दे, रेवेन्यू, whatever profits, वो सब हमको अमाउंट तरफ से आता है जो हम यूज करके लाइबिलिटीज को रीपे करेंगे. ये लिक्विडिटी मतलब क्या है? इट विल टेल यू, ये बताता है कि हमको are you able to pay your liabilities? Are you able to pay your liabilities with the assets that you have? जो हमारे पास assets है वो sufficient है कि नहीं हमारा liabilities repay करने के लिए, वही हम देखते हैं liquidity position में. जब हम बोलते हैं कि हम लिक्विड है, वी आर लिक्विड इनफ टू रीपे बैक, मतलब ये है कि हमारा लाइबिलिटीज हम पे कर सकते हैं यूजिंग आवर एसेट्स व्हाट एवर वी हैव. दैट इज व्हाट इज लिक्विडिटी, which is told, or that is why inventory. Why is inventory coming here? Because inventory is part of your current assets. Inventory current assets में एक part है ना, इसलिए वो important है, और इसका valuation भी important है कि हम इसको use करके देखेंगे कि हमारा बैलेंस शीट लिक्विड है कि नहीं, हम हमारा liabilities पेश कर सकते कि नहीं using हमारा liabilities. That is what is liquidity position. Now clear? Or should I repeat? Akshit? Hello? Akshit? Megha is also raising her hand. You have something to ask, Megha? Visual? Okay, Rahul also.
Good morning, ma'am.
Ma'am?
Good morning, ma'am.
Yes, yes. Morning.
मैम मुझे ये समझना है कि ओपनिंग इन्वेंटरी ग्रॉस प्रॉफिट में, जैसे ओपनिंग इन्वेंटरी हमारी 0 है तो ग्रॉस प्रॉफिट हमारा कितना आएगा?
ओपनिंग इन्वेंट्री 0 है. ओके ओके, देन ग्रॉस प्रॉफिट कितना होगा? ये है आपका क्वेश्चन?
यस.
ओपनिंग इन्वेंट्री 0 होने पर भी कुछ फर्क नहीं पड़ेगा. Please bear with my Hindi. I don't know if I'm speaking very bad Hindi, but I'm trying to manage. So please bear with my Hindi, okay? So I'm making some mistake in between in Hindi. Topic I will not make mistake, but Hindi I think I will make mistake. So please bear with my Hindi. So sorry for that.
No issue, ma'am.
Thank you. Okay. So like he was asking, in opening inventory 0 is what he told, right? And let's assume sales of 10,000, or closing inventory हम assume करेंगे some 5,000. Purchases let's assume some 20,000.
यस.
ये sales 50,000 है, और closing inventory is 5,000. Some direct expenses of some 6,000. Okay. Now I've assumed the opening inventory as 0, like he asked. So what is my gross profit? Now you answer, what is the gross profit, ma? क्या है हमारा gross profit इस example में? Just calculate gross profit. Yes, Sarala, you want to answer?
Hello.
Yes, Sarala, please.
Ma'am,
What is the gross
profit
profit?
is 29,000.
29?
29,000.
39,000. Okay.
29,000.
Okay, 29,000. Now, I don't know who was asking, visual or someone was asking this question. So, हमारे पास inventory, opening inventory नहीं होने पर भी कुछ फर्क नहीं पड़ेगा, because opening inventory is just a case wherein when you're when you're starting your financial year, you have some stock left with you. आपके पास कुछ stock है when you're starting your financial year, then it is fine. You use that stock and whatever purchases हम in the middle of the year हम purchases भी करेंगे ना, ये दोनों मिल के you will sell it. But if you did not have any opening inventory, then क्या होगा? Whatever purchases you made in that year only will be sold. जो परचेसेस है हमारे पास इन दैट ईयर वही सेल करेंगे हम. जो जब इन्वेंट्री नहीं है, ओपनिंग इन्वेंट्री, तो क्या है, व्हेन यू स्टार्ट योर बिजनेस, लाइक सपोज दिस इज योर स्टार्टअप or this is the first year you have started your business, do you think you will have opening inventory? Definitely not, because from where will you get your inventory? कहाँ से आएगा inventory? Because you just started your business, you will not have inventory. So when it is a start of the business, opening inventory is definitely zero only. So it is not an issue for sure, because opening inventory in some cases will be there, in few cases or in few businesses opening inventory will not be there. But purchases, जो purchase करेंगे हम year में, in that year वही sell करेंगे और revenue generate करेंगे, उससे हमारा gross profit आ जाएगा. ठीक है, clear अभी? Yes or no?
Ma'am, one more query.
Yes.
Like in what are the situations where this liquid analysis is being used, ma'am? What are the
Liquidity
situations?
analysis? You're asking
Yes,
about
being used,
liquidity
yes,
analysis.
yes.
Liquidity
What
analysis.
situations is
Yeah.
being used?
Yeah, continue. Finish your question. Yeah.
Yeah, it has been used. What are the in which situations this liquid analysis will be used?
That's it. Yeah.
Yeah. And second thing, that at what value it's going to, at what value this inventory is being valued, whether
At
it's a
what?
selling price, at what value the inventory is valued, assessed, or valued the inventory at what price, whether it's a
Okay.
selling price or realizable value.
Inventory valuation, we'll look into this in the next slide. So don't worry about how to value or how to record this. How much will be the value of inventory? We don't know that, right? How to value it, we have different methods of doing it. That I will take it in the next slide. Don't worry about that. But I'll answer this question of liquidity. Now, where do we use this liquidity? Like I've mentioned, when you're applying for a bank loan, or when you are applying for some sort of, you want to go for this IPO. I hope you all know what is IPO, initial public offer. If you are just a private company. Till now, abhi tak you are just private company. Now you want to move to public company. You want to issue your shares to general public, right? Then you go for IPO in that cases also. Or if you want to applying for bank loan, or if you're applying for any other anything, when you are applying for something, or when someone is looking at your financial statements, they will look at your liquidity position. They will look at your liquidity position and assess whether you are liquid enough, or whether you are having that potential. आपको वो potential है कि नहीं कि you can repay. Because when I'm giving a loan, or when I am investing in your company, I want to know whether you're worth it, right? How will I know whether you're worth it or not? One such option is liquidity. I won't say liquidity is the only solution. Liquidity is the only solution hai ki, to determine whether you're good in that organization, whether you're performing well. No, it is one of the criteria that everybody looks at. Maybe the banker, maybe the investor, or maybe even the suppliers. जो suppliers होते हैं हमको, they also look at your liquidity. Why do they have to look at your liquidity? Because I am supplying goods to you and I am giving goods on credit. What if you don't pay back? कि आप रिटर्न पे बैक नहीं कर सकते हैं तो क्या करेंगे हम कुछ नहीं कर सकते हैं ना. इसलिए सप्लायर्स भी लिक्विडिटी पोजीशन चेक करते हैं, सप्लायर्स चेक करते हैं, बैंकर्स चेक करते हैं, सब स्टेक होल्डर्स जो होंगे वो सब आपकी लिक्विडिटी पोजीशन को चेक करके they will assess whether you are having some good position, you have some good cash in hand, or you have some good amount of surplus to repay back any loans that you are going to take in future, is what they will assess using this liquidity position. Am I clear, Sarla?
Yes, ma'am. Thank you.
Yeah. Okay. I have few people who have raised their hands. Anyone wants to ask questions? Megha, Akshat. Akshat, yes? Go Hill.
Ma'am, my question is, if our opening inventory is 0, then how can we have closing inventory? मतलब opening ही नहीं है तो closing कैसे हो सकता है, right?
Opening is something that is coming from last year.
Yes.
And where is this? Where is an example? Not somewhere. Yeah. Look at this. So you were saying opening inventory is 0. How did we have closing inventory? Good question. But then you look at your purchases. आपके purchases को देखिए. How much is the purchase you have done the current year? 20,000. Right?
Yes.
And 20,000 is sold for 50,000.
Okay.
Can you see the sales 50,000? Now,
Yes,
which
ma'am.
means out of this 20,000, 15,000 worth of goods were sold for 50,000. Okay? And the remaining 5,000 is there in your closing inventory. That is what is there. Okay? So 15,000 worth of goods जो है उसको हम 50,000 को sale किया, which means what is the profit element that we have here? 35,000.
Yes.
So the profit that we have added here, because we don't, if you have purchased it for 15,000, not needed, you will sell it for 15,000, right? You will add profit to it. I've added 35,000 profit and sold it for 50,000, which is here. So what is the worth of goods that are left in my closing inventory? Those are 5,000, which are part of your purchases. Since no opening inventory, कहाँ से आते हैं हमारा closing stock? It is coming from purchases.
Okay.
But why is your 35,000 not matching to your gross profit here? Anyone can answer this. I told we added a profit of 35,000, but your gross profit is 29,000. Why is it not matching? Anyone? I have someone raising their hands. Please answer. Yes?
We have direct expenses.
Yes, very good. Okay, mute yourself. So it is because we have direct expenses also, right? It is not only that, हमारे पास stock है. We are adding 35,000 profit and selling it for 50,000. Good. But it is not that whatever profit you have earned will be there with you. You will also have to incur some expenses. आपको जो expenses है, after incurring all those expenses, only then whatever is left, जो हमारे पास balance होगा, वो हमारे प्रॉफिट के बाद एक्सपेंसेस भी इनकर करने के बाद क्या होगा वही है ग्रॉस प्रॉफिट. जब एक्सपेंसेस इनकर करने के बाद जो लेफ्ट ओवर होगा वही है ग्रॉस प्रॉफिट. वी कांट से एंटायर प्रॉफिट इज योर ग्रॉस प्रॉफिट. इट डिपेंड्स ऑन द एक्सपेंडिचर आल्सो. एनी अदर क्वेश्चंस? Megha, you have something to ask? And what about visual? Yes, Harsh.
Ma'am, what is the difference between liquidity analysis and financial position?
Okay, I'll go back to the slide. Now, when we were talking about liquidity analysis, it will tell you what is your net working capital, what is your current ratio and all those things. The formula, your liquidity position of how are we able to repay back and all. When you talk about financial position, it will look at your balance sheet. Just a second. It will look at your balance sheet. Where it is placed in your balance sheet. कहाँ पे है balance sheet में? Your inventory is in your balance sheet and where? In your current assets. So that is, since it is placed in your balance sheet and since it is affecting your current assets, any change or any wrong valuation in your inventory will affect your balance sheet. That is what it is trying to say in the third, here, in this third point. In this third point, we are talking about how the valuation will affect your financial position. It is because the inventory is placed in your balance sheet under your current asset. Any wrong classification or any wrong valuation will affect your financial position. But here, any wrong valuation of your inventory will affect your liquidity position, as in it will tell you you're able to or not able to pay back your liabilities, right? So if I say, I'll go back to an example again. If I say my current assets are 10,000 and actual current assets were 15,000. Now, this difference in valuation of my current assets are because of inventory. So this wrong valuation, do you think your liquidity position will affect? Yes, because your current asset by current liability, this formula will change. Your answer will change. Your net working capital formula also will change because of inventory. These two are going wrong and these two are affecting your liquidity position. ये दोनों formulas हमारे liquidity position को affect करते हैं. इसलिए inventory valuation wrong होने पर ये दोनों formulas का आंसर भी wrong हो जाएंगे और liquidity when you're comparing the liquidity of your organization, the picture also will go wrong. That is liquidity analysis. But when you talk about financial position, like I told you, हमारे balance sheet में current assets के नीचे होगा inventory under current asset. Suppose this is 10,000, your financial position is a different picture. But if this is 15,000, your financial position or your balance sheet picture is different. That is what it means when you talk about financial position. I will say I have assets of some 1 lakh, right? When my inventory is 10,000, my total assets and liabilities were 1 lakh. But if my inventory is wrongly valued, it actually have to be 15,000. Then this will change to how much? 1,05,000. Yes or no? Harsh, are you there?
Yes, ma'am.
This is financial position. Your financial position of assets and liabilities totals are changing because of wrong inventory valuation. But here, your liquidity position of your current assets and liabilities ratios and formulas are changing. That is liquidity analysis, and this is financial position. Now, are you clear with the difference? Everyone, not just Harsh, others also. Are you clear?
Yes, ma'am. Thank you,
Sure,
ma'am.
Harsh?
Yes, ma'am.
Okay. Yes, Reshma. Okay, I'll move on then. I'm assuming you're clear with Okay, I'm assuming that you're clear. Any questions? Maybe we'll see in the end if you're still having questions on this. But I think till now we just discussed the definition. Yeah, Reshma is talking. Reshma, you have something to ask? Fine. I'll move on. So now we have seen the reason. Please unmute yourself. So we have seen why inventory valuation is important, right? We have seen the reasons why inventory valuation have to be done, or how it is affecting your liquidity position, or how it is affecting your financial position and your income as well, that we have seen till now. Now we will see how to value the inventory, right? I told you that in your balance sheet under current assets, inventory have to be shown, but what value will you show? Okay, and in your trading account also you will have to show the closing inventory, and what value will you show? That is what is the question, right? So the main basis of inventory valuation is it has to be cost or NRV, whichever is lower. This is told by the standard. The standard accounting standard. I'll not go so deep into what is an accounting standard and all because you don't have standards in your foundation level. But when you're doing your intermediate and all, you will have accounting standard numbers and all those coming up. But for now, just understand that accounting standard is something that will give you a base when you have to record some value, when you don't know whether to do it on the debit side or credit side, or when you don't know how to record something, or when you don't know something that have to be done in your accounting thing. The accounting standard is like a base, or it is like something that will tell you this has to be valued at this value, or this is how you will have to value these are something that you have to include, or these are something that you have to exclude, this is how you have to show it, or this is how you will have to record it. Everything is told by the accounting standard. Why do we have to follow the accounting standard? It is for uniformity, because I will do something, I want to record inventory differently, I will do it, and some other person is doing inventory at a different pace. Then what happens? There is that uniformity missing in your financial statements. So when I have to compare two same companies doing different things, I can't compare being an investor or being a stakeholder. So what I will do, I will try to maintain that uniformity. That is why ICAI have brought in these accounting standards wherein uniformity can be maintained, that everybody will follow the same thing. And it is easy for comparison and also easy for people to understand what is happening in that standard, or understand what is happening in that particular balance. Right. Now the basis here is the inventory have to be valued at cost or NRV, whichever is less, right? So what is included in cost, what is included in NRV, that we will see. In cost, we will have 4 components. One is the cost of purchase, cost of conversion, any other cost, and the exclusions that you're going to have, right? So what are cost, or what are included? क्या included है हमारे cost of purchase में? Cost of purchase मतलब क्या है? Now I went to a supplier, okay, minus X limited, assuming minus X limited. I went to Y limited एंड मैंने पूछा कि मुझे 100 यूनिट्स एक स्टॉक चाहिए, ठीक है? वो 100 यूनिट्स का स्टॉक का परचेस वैल्यू है कि उसने बोला था कि यू हैव टू पे मी 1 lakh फॉर इट, राइट? So I paid 1 lakh to him and got the stock with me. Now, what is the purchase price here? 1 lakh, right? That is called purchase price. This is included in your cost of purchase. So first main thing is that you will have to include the purchase, whatever purchase price you have paid to the supplier. Let it be a raw material or let it be a finished good, whatever it is. When you have purchased something, you will pay an amount to the supplier. That amount is first included here in the cost of purchase. That's the first thing. Then next you have duties and taxes. ये क्या है? Duties और taxes मतलब क्या है कि हम GST पे करते हैं, और if any other applicable taxes are there. Now VAT is not there, but GST in India we mostly follow GST. In few other countries they still have VAT. So it depends. If you're purchasing it from a supplier who is in up, then you have to pay VAT also, or any other taxes that are applied. So any duties, excise duty और कुछ क्या duties होगा applicable, वो सब हम pay करना है. Right? All those duties and taxes are also included here. But again, there is an exception to it, that if these are recoverable, recoverable matlab kya hai? You are paying a tax, okay? You are paying a tax, and this tax you will recover it later. Now GST kya hoga? GST आप pay करेंगे, right? And when you sell it, you have input tax and output tax, right? So when you're selling the goods, you collect GST. And only the net amount is paid to the government, right? Which means you are able to recover back your GST or any other duties that you have. You are trying to recover them back, right? So all those taxes that are recovered will have to be ignored, which means only those taxes which are non-recoverable have to be included in your cost of purchase. That is one main thing, right? And we will next move on to any other expenses. Any other expenses matlab ye kya? Inward, freight inwards. You must have heard freight inwards, which means what? Now, हम वाई लिमिटेड के पास क्या है कि बोला कि हमको 100 यूनिट्स चाहिए, उसने दे दिया। अब हम 100 यूनिट्स को कैसे ले आएंगे हमारे गोडाउन पे या हमारे स्टॉक यूनिट के पास, हमारे हमारे कंपनी के पास लेके आना है ना। यू हैव टू ब्रिंग इट टू योर लोकेशन. हाउ आर यू bring it? You will have to use some transport. You are using a transport and then you are bringing it to your location. So you will incur some freight, that is also included. Now again, one more condition is that your expenses have to be in such a manner or such a thing that ये expense हमको जरूरी है, वो एक्सपेंस ही हम इंक्लूड करेंगे कॉस्ट ऑफ परचेस में. जो एक्सपेंसेस if you have to bring that product to your location, whatever expenses you include here are added to the cost of purchase. Suppose I have incurred, I brought it to my location, the goods are with me in my location from, I've purchased it from my supplier, got it to my location, done. Now after I get it to my location, then if I incur any expense, that is not added to the cost of purchase, because without this expense also you can still use the product. So I would introduce a word called directly attributable, which means what? Directly attributable cost means what? The cost which is needed to bring your product to your location, only that cost have to be added. You can't add whatever cost that is available to you or whatever cost you have incurred. Cost of purchase here will only include any other expenses. I would say here any other expenses also which are directly attributable. You can't include all the costs that are incurred. You will only have to include the costs that are directly attributable, which means to bring that product to your location, anything that is important like the transportation or sometimes packing is also needed because you don't want to damage the goods. You do a little packing for a safer journey, then that is also important. Not the packing that is done after you bring it to your location. So before you bring it to the location, I have to use this product, I have to incur this cost. Then that's directly attributable cost. Something that is not needed, then don't add it to the cost of purchase. This is as per the standard that is telling you that you can include the purchase price, any duties or taxes that are not recoverable, and any freight inwards. Freight inwards is mostly included. Inwards means to bring to your location, right? So it is included. Outward means from your location to some other location, which is not added, and any other expenses which are directly attributable. These have to be included in your cost of purchase, right? So the first one that is included in your cost is the cost of purchase. Let it be a raw material or a finished good. It depends on the business. We are done. Now, what are included in cost of conversion? In cost of conversion, like I told you, raw materials, then we use some labor, some other direct expenses, and then convert them. Conversion means what? Converting a raw material into a finished product, right? So anything that is included in your cost of conversion, like the raw materials, the labor that we use, and any other direct expenses that we are using to convert the product will be categorized under cost of conversion, right? So in the cost of purchase, we can also write fixed and variable overhead. Overhead means other expenditure that we incur. Some can be fixed, some can be variable. Variable means they will change from unit to unit. Fixed means whether you are doing the production or not, it will still have to be incurred. But variable means what? Only if you are manufacturing, that cost have to be incurred. Otherwise, no, right? Let's assume rent. Suppose there is rent of a building. Whether you do the production or not, you still have to pay the rent. That is a fixed overhead. But what is a variable overhead? Suppose you have this production of a raw material, you're using a machinery. That machinery is costing you 10 rupees per hour. Now, if you are running that machine only, that 10 rupees is incurred. Otherwise, no. That is called variable overhead. So if you're doing the production, this cost is incurred. If you're doing the production or not, still if it is incurred, then that is fixed overhead. So all these are included in your conversion. And here I've written purchase price. I'm writing it again if someone wants to write it. duties and taxes. Then I will also include right inwards. Then I have other expenses. Right? In this cost of purchase, you also have some exclusions. Writing it above in this cost of purchase. Suppose the supplier has given you some trade discount. You have to remove it. What is trade discount? The customer told that since you are purchasing a good lot of units, हम आपको discount दे देंगे. वो discount you have to exclude it. Definitely, when discount is given means what? It is a benefit to you. So exclude करना ही है, right? That is one thing. And any rebates you get. Rebate matlab it can be from government. If the government says that if you're purchasing it from this particular supplier because they want to encourage that particular area or that particular sales areas and all, they will say that you purchase it from here, we will give you a rebate, we will give you a discount, or we will give you some kind of a benefit. So all those also have to be excluded, or any duty drawbacks. Duty drawbacks. Matlab you pay this duty and you get it back. Right? So all those things also. I mean, excess duty is paid, but you're able to get it back because of some reason. It is because that is in the exclusion, or that is an exempted good and all. Such things also have to be excluded. Something that you're not paying should not be included. That's the form, or that's the criteria here. You're not paying it, don't include in your cost of purchase. If you're paying it, you can include, but only the costs that are incurred till you bring that product to your location. After that, it cannot be included in the cost of purchase. You can include it in your trading account and other things, but here when you're including it for the inventory valuation, you will not include. So here for cost of purchase, we have 4 things, and then exclusions also. And I told you other expenses directly add. Right? So we are done with cost of purchase and cost of conversion. Now let's look at other cost. In other cost, you will have admin overheads, and you will also have few interest cost. Now these two will come with exceptional cases, right? Admin overhead means what? Administration cost. You can ask me a question, trading account will only include manufacturing expenses. It will not include any admin or selling and distribution. It is because they will come under your P&L. They are not directly part of your product. Admin means what? Something that relates to a salary of the employees, or the rent, maintenance cost, and all these comes under your administration. How does they come under your cost of your inventory? They will not directly come. It is with an exception that suppose that admin cost or overhead cost is very much needed to bring your product to your location, like I mentioned in this cost of purchase. If you have to bring the product to your location, any admin cost that is needed can be added, right? If it is needed to bring to your location, if not, then you won't add it. So all those will come under here. Admin overhead costs which are not needed to bring the product to your location, then those will come under your exclusions. You have to remove them. You can't add them. Only admin overhead costs that are required to bring those product to your location, add it under other cost. If any other expenses or any other admin costs, you will have to exclude them, right? And I told you about interest cost. Interest cost means what? You have taken loan. Do you think loan, on loan you pay interest? Some interest pay karte hai na loan pe. That comes under your admin cost, which is included in your P&L statement. How is that going to be added here? It is again with an exception that there are few inventories which take longer period. Okay, longer period, like you have this wine, or you have this rubber plantation. All those are like something which take years, longer period. For those kind of inventories, you will have to, borrow a loan and pay some interest. those will be covered under your other cost. This also has a standard borrowing cost. It will be discussed in more detail of how borrowing cost is added to the cost of inventory and all. More detail, I mean, how it works or what is the condition that is there existing in this and all. We will see that. But for now, you understand that any inventory that is taking a longer period, for those kind of inventories, interest cost is added. Other interest costs are not added. So like I told you, other interest costs, others are not added. Whatever is included here is added. Whatever other than these will be excluded. So these two are some exclusions that we are having, and also abnormal costs. What are abnormal costs? It is because of the machine failure or a person's fault. There are some, products that have that have failed, or you have an abnormal loss that you gave 100 units of input and you only got 80 units, 20 units, 10 units are like normal loss, but it is because of a person's fault or the machine fault you have a loss. Such kind of wasted goods or any abnormal losses that you have to be excluded. That is one thing. And storage cost. Again, this also comes with an exception that if the storage cost is needed for your product, then you can add it. It is very important that this product have to be having the storage cost, then you can add it. If not, you will exclude. So all these will come with an exception that you just think in your mind, is this cost needed for my product right now to bring it to my location or to use it? I need to incur this cost, then you add it. If not, you will have to exclude it. So that's the only criteria you will have to check for. Is this cost needed for me to bring it to my location? Or is this cost needed for me to store? Without this cost, I can't run my business or I can't do the production. Then yes, definitely you will have to include somewhere in the purchase, conversion or other cost. If not, you will exclude them. And also, we know the selling and distribution cost also will be excluded because that comes under your P&L account. It doesn't come under your trading account. It is a part of your selling and distribution, which is done later, not during the production. So that is not included in your cost of purchase. So cost is including the cost of purchase, cost of conversion, other costs, and there are few exclusions also. In cost of purchase, you will have all those costs that are required for your product to bring to your location and to bring to your usage. And cost of conversion, if you're buying a raw material and then converting them, you will include labor and some other expenditure and overheads which are required for doing that production and then making a finished good. That is also included. And other costs, you will have admin and interest costs, which are again with an exception that if these are needed and very specific cost to this product, then you include it. Otherwise, no. And interest costs also, if it is for a longer inventory, then only you will add it. This is again comes with a standard of borrowing costs where it is discussed in more detail about it. And exclusions, like I told, any other admin cost is excluded. Any other interest cost is excluded. Abnormal costs are excluded. Storage cost, if it is needed, included. If the product works without storage also, then excluded. Then selling and distribution is anyway excluded. Right? So costs are having 3 inclusions and 1 exclusions. Purchase, conversion, other costs with few exclusions. Everything has a reason why we are doing it, right? Like I told you, basic thing that you have to remember, is it needed for me? Can I ignore this cost and still do the production or still bring it to my location? Then you exclude it. But if this cost is not incurred, then I can't bring it to my location or I can't use the product, then yes, you have to add it. That's the only thing you will have to mainly remember. Otherwise, these few things will work. Okay, now let's also see what is NRV, net realizable value. In this NRV, you will have 2 things. Selling price, cost to sell. Okay, now this is called NRV. What is the selling price and what is this cost to sell? I'll take you through an example. Okay, let us assume I have a product. I can sell this product for some 20,000. Okay, this product is some machinery. Assuming this is एक machine है, we can sell it for 20,000. But if you have to sell this machine, I will have to dismantle it. क्या करना है इसको? Dismantle करना है. Dismantle मतलब क्या है? हमारे location पे it is fixed. In your factory, you have that machine fixed to your ground. So you will have to dismantle it or remove it from that ground and then sell it. Only then you can sell it. You can't sell the machine directly, right? You will have to dismantle it and sell it. Now, to dismantle and to do all this packing and all, I might have to incur some 5,000. Are we clear? I can sell this machinery for 20,000. Good. But if I have to sell this machine, हम dismantle करना है इसको. We have to dismantle and only then you can sell it. And what is the dismantling cost? 5,000. Which means though you are selling it for 20,000, what is the net amount that you get in your hands? Only 15,000. Yes or no? It is because though I will sell it for 20,000, I'm incurring a cost of 5,000 to sell it, right? That is why this is called cost to sell. To sell it only, I will incur some cost, right? Without dismantling, can you sell the machinery? No, definitely no. After dismantling the machinery only, you can sell it to the customer. So dismantling is something which is important. Now, this is called cost to sell. This is called NRV. So though you're selling it for 20,000, the net amount that you have or that you realize in your hands is only 15,000. It is because of the cost that is included in that particular machinery. This will happen for only few types of products. It's not all of them that NRV is different. Sometimes the product can be directly sold. If it is not having any dismantling, or if it is, suppose it is AC, you will have to uninstall it, right? Uninstalling will have some cost. But if there is a table and you have to sell it, you can directly sell the table. You don't have to dismantle it from somewhere, right? The selling price will be equal to your NRV. But if something has to be dismantled or uninstalled or some cost is incurred to sell it, then that is called NRV. And there is a difference between the selling price and the NRV. I'll give you one more example. Sometimes you will have to do a little tinkering to the product, right? Let's assume I have a old kind of a building. Now I have to, we don't dismantle the building and all to sell it. I sell this building and I told that I will sell it for 10 lakhs. The person agreed, but he told that if I have to pay you 10 lakhs, you will have to paint the building and sell it to me. I agreed to it. But for that painting, do you think you will incur some cost or you will do it for free? No, right? So maybe I will incur some 1 lakh for painting the building or cleaning that building. So what is my amount that is left with me? Net amount. I will sell the building for 10 lakh. The customer is paying me 10 lakh. But for painting and other cleaning cost, I will have to incur 1 lakh. So the net amount that is left with me is only 9 lakh. This is called NRV. I hope now you understood what is NRV. Right? So NRV is selling price minus if you have to incur any cost to sell that product, that is removed, and whatever amount is remaining is called NRV, net realizable value. Clear? Yes or no? Yes, Sarala?
Now, in case of exclusions, exclusions for the cost of purchase, in respect of this quantity discount and this cash discount, whether we can consider this quantity discount and this
trade discount and cash discount. You mean trade and cash discount?
No, quantity discount. No, for quantities also discount.
Okay.
And also cash discount.
Okay.
Both are excluded, right?
Yeah, excluded because you're not paying anything. Right, cash discount matlab he gave you a discount in the form of some cash, right? He have decreased some amount and told you that instead of 10,000 you just pay 9,500. So what is your purchase cost here? 9,500 only. You have to exclude that discount for sure. Yes.
From second case, you said that in certain special cases, certain exclusion expenses also will be included. It is very necessary. Based on the necessary, they will include.
Which one? Which one?
No, in respect of exclusion expenses, In certain
Here,
special
you're talking
cases,
about the fourth one?
yes, ma'am. In respect of
Okay.
exclusions expenses, due to requirement of situation, certain expenses will be added to the cost of purchases. You said
Yes,
that.
yes,
My question
yes.
is, are we required to certify the reason for an auditing purpose, for audit purpose, or for accounting purpose, or for explanation purpose? Are we required to certify? Yes, because of this reasons we are adding this expenses to the cost of purchase. Is there any we required to certify that, ma'am?
Certified in the sense it need not be certified, like you don't have to give any certificate or kind of a thing to the auditor and all. But generally when you say that my let's assume a storage cost, okay, which is very needed for my product, that I can't exclude this cost, I will have to include this cost because this is very important. Now it is your assumption, the standard has given you that these are the exclusions and these are the inclusions, and these are few things that you can take care. You can add them, you can exclude them according to the list they have given you, general thing that they have given you. And it again depends on business to business. Every business you can't say storage cost have to be excluded, because if you see there are few products which are if you don't store them properly, you can't sell them. For such cases, storage cost is important, definitely important. You can't say, I will exclude that. Those costs have to be included. So it depends on business to business. If the organization or the person, whoever is there, uh, the organization, suppose CEO have to answer, or the manager who has prepared the financial statements, he has assumed that storage cost is important for my product and have added. Yes, he can do that. We just have to explain why we have done that, or if the auditor is okay, then he will accept it. It is not that you'll have to certify, because it is visible also, no? If it is a perishable product, storage is important, definitely. Then you can't say that I will need a certificate for it. So certification is not needed,
The
but
reason is
inclusions and exclusion depends on business to business and assumption of that particular person, whoever
the
is
reason is
preparing
that
it.
it's small amount means it is okay. If it is a very
Yeah.
big amount, auditable objections may come. So it's because of that volume of the amount. If it is
Hmm.
more, to avoid the tax or to
Hmm.
many reasons, they may boost up the expenses. So to
Yes, it
avoid
will
that,
change your profits also. Yes,
that is the
yes.
reason. So since it is when they're allowing, a lot of precautions will be taken on that part. So that's why I asked,
Hmm.
ma'am, whether in any way certification.
Certifications are not needed. You just have to give an assumption, or you will have to give your own reason. Now when auditor is doing that audit, he will definitely ask you, if he's okay with it, it is fine, because if it is evident, nobody will ask you looking at the product. But if it is, he still the question, he will ask you, so you will have to give an explanation saying that, or they might ask you a written representation saying that this is what is our assumption and we are doing it. If the auditor is okay, he will go with it. If he still has an objection, then he will raise it in his audit report.
Okay. Thank you, ma'am.
Should we give a break? Uh, Priya, are you there?
Yes, ma'am.
Should we give a break for them just for 5 minutes or so? Not needed.
Okay, okay, no issue. Okay, break start.
We'll start after 5 minutes then.
Okay, ma'am. Okay.
Yeah.
Hello, ma'am.
Shall we start?
Yeah, ma'am. Please continue.
So we have seen this basis for inventory evaluation. Like I told you, it should be cost or NRV, whichever is less. And we have also seen what are included in cost and what is included in NRV. So before I go to this period perpetual inventory, we'll do a problem. So look at this question, illustration 1. Read this question. So Sureka Limited is dealing with 3 products, P, Q, and R. We have 3 products different, which are neither similar nor interchangeable, right? Which means they are not having any similarity. Now, can I replace it with P? P and Q, can it be replaced, or can it, instead of P, can I use Q and then finish my production? It cannot be done. So they are not similar, and then they cannot be interchangeable, right? That's one thing that is given here. And at the end of the financial year, the historical cost NRV of the closing stock are given to you. They're asking you to determine the value of closing stock. Now, for all the 3 products, historical cost is given and net realizable value is given. Here they didn't ask you to calculate the cost. That's the good part of this question, wherein if you have to calculate the cost, you will only have to determine what is the value of this P, or what is the value of Q, or what is the value of R. But it is directly given to you. NRV is also directly given to you. They're not asking you to calculate the cost or NRV. Both are given to you. You will only have to determine what is the value of closing stock, right? Which means what is happening here? I have purchased 3 different products, and now I have to sell. If I have to sell these products in the market, I can sell it for these prices. That is NRV, correct? I purchased P for 38 lakhs. And if I have to sell it to the market, I can sell it for 42 lakhs. That is what is given in the question, the information that is given in the question. Now, when you are showing it in your closing stock, the standard has given you an option that you can only record it at NRV or cost, whichever is lower. Whichever is lower only have to be recorded, right? Which means what? What are the products that we have? I hope you all are doing it with me. So we're trying to calculate the value of closing inventory. What are the products that we have? Let's go back to the question. We have 3, P, Q, and R. And what is the historical cost? This is rupees in lakhs. Then we have net realizable value. And this will be, the 4th column will be value of inventory. Now, what is the historical cost we have? We have purchased this for 38 lakhs and the net realizable value is 42. So what is the value of inventory here? The closing inventory will be this or this, whichever is lower. So the value will be 38. What is happening here? Though you have purchased it for 38, the value, the selling price minus cost to sell is 42. So you're trying to determine the cost of your product and also the net realizable value in the market. I can sell this product for 42 lakhs. I've purchased it for 38 lakhs. These are the two scenarios you have. Now the standard says you can only record it at lower price, which means what? I'm trying to be, prudent here. I'm trying to be conservative here. I'm following the conservatism concept here that I can't assume since I can sell it for 42. Some people argue that I will show 42 lakhs in my inventory. You can't do that because you will have to be prudent or you have to be conservative enough. Conservative means what? I can't show the profits that are unrealizable. I don't know. Prudent means you will have to anticipate losses, but you can't anticipate profits, right? If you're saying that I can sell it for 42, if you show it for 42 and later the price of the inventory is falling down, that will be a trouble to you, right? So any profits you can't anticipate, but if it is a loss, you will have to show it. That concept is followed here by the standard, which says try to record it at a lower price only. Let it be. If you're trying to sell it for more, or if you're capable of selling it for more, it is good. But record it at the lower price to be prudent enough or to be conservative enough. So that is what the standard, the main idea of the standard is, trying to be conservative. So what is lower value here? 38. So here the value is again rupees in lakhs. So the closing inventory value of product P is how much? 38. Now the next product is what? Q, which has 29 and 29. 29, 29. So the value of inventory also will be 29 because both are same here. And R has 17 and 14. Whichever is lower, 14, right? Now, in this case, what happened? The NRV is lower, which means I purchased for 17 lakhs, but now in the market, it is only 14 lakhs. It is because the product has become obsolete or the product is not being used by many people. The value has come down. Now, can you still say that I will only cost? I've purchased it for 17 lakhs. So I will only show cost price in my books of accounts and my closing inventory is 17 lakhs. It is not possible because the standard says, though you have purchased it for 17 lakhs, it can't be realized at 17 lakhs. The value in the market is only 14. So be prudent, show at a lower price only. So whichever is lower only have to be shown. Maybe purchased it for a higher price or maybe you purchased it for a lower price. What is realized in the market or what is realizable in the market and what you have purchased it for, both have to be compared and whichever is lower only have to be shown in your books of accounts. This column, the value of inventory, is nothing but the value that you are going to show in your credit and your balance sheet. Current assets, credit in your trading account as your closing inventory. So 2 times you'll have to show the value of inventory, closing inventory. What is the value you will show is this. These 3 are the values that you will have to show. Am I clear? So what is the total? Let us total all the 3. One is 38 plus 29 plus 38 plus 29 plus 40, 81. 81. So in this question, we are just trying to calculate the value of inventory using the standard which says cost or NRV, whichever is lower. That's it. Is this clear? I'll pause. Someone wants to write down, please write it down. Yes, Muskan, you have a question? Arjun also has a question. Arjun? Yes, Arjun.
Ma'am, can you explain again the table? I don't know.
Yeah. These three columns are given in your question directly. So if you look at the table, three columns are directly given in your question. Yeah. So we have three products given in the question, and each of them has cost also given and NRV. Cost means now you go to the market. आप market को जाके प्रोडक्ट पी को परचेस करने के लिए आपको 38 लाख पड़ेगा कॉस्ट, ठीक है। और आप इस प्रोडक्ट को सेल करने के लिए आप if you want to sell this product you can sell it for 42 lakhs. आप 42 lakhs को सेल कर सकते हैं। आप 38 lakhs को परचेस किए पर आप सेल करने के लिए 42 lakhs, आप सेल करने से 42 lakhs आ जाएगा वो प्रोडक्ट पी के। और क्यू में क्या होगा, आप 29 लाख को परचेस किया और आप सेल करेंगे 29 lakhs को भी। सो you have purchased it for 29 and you can sell it also at 29. Net realizable value is nothing but the value that you can sell it in the market and realize in your hands, right? I told you the formula. Selling price minus cost to sell will be net realizable value, right? So if you are able to sell this product, if you have to sell this product, what is the value you will realize? Each product has their own realizable value, and R has 17 lakhs as the cost and 14 lakhs as realizable value. Now, what is the formula that we have? The standard has told you. Let's go back here. Here, if you can see the PPT that I'm displaying. Cost or NRV, whichever is lower is what we will have to take it, right? Now, in this question, cost or NRV, whichever is lower is what is your value of inventory, which means when I am taking my trading account, this is my trading account. I have to show closing inventory, correct? In this closing inventory, what is the value that I have to show? I don't know. I don't know the value of closing stock, right? Because closing stock comes after the purchases, sales, and everything. Opening inventory, purchases, sales, every adjustment is done. Then whatever is left is closing inventory. What should be the value that I have to take? That is nothing but this value. You will have to take 81. But how did I arrive at 81? This 81 is arrived using this formula, cost or NRV, whichever is lower. P has been purchased at 38 and the realizable value is 42, whichever is lower. So I have taken 38 as the value of inventory of P, product P only. And Q, both are same, so this will be the same. And R will be historical cost is 17. I purchased it for 17, but if I go to the market, the value that is realizable now is only 14. So the value of inventory is only 14. Whichever is lower, I'm going to take the value which is low. Why only lower? Like I told you, the reason I just told you also the reason. Why are we taking only lower? Why can't we take higher value? It is because I'm being prudent, right? The standard's main concern is that you have to be prudent. You can't expect more profit to your organization. I'm saying that I purchased it for 38, but I can sell it for 42, so I will record 42 in my books of accounts. The standard says no, right? Because you can't expect something in future and record it now itself. That is profit. You can't do that. If it is a loss, then you expect and then record it right now. It is okay, accepted as per the accounting concepts. But something that is a profit which is expected in future cannot be taken into your books of accounts right now. That is why the formula is cost or NRV, whichever is lower and not higher. Am I clear now? Yes. Arjun, you have something to ask? Akshit? Akshit, you want to ask something?
Hello, ma'am.
Yes, Akshit.
Ma'am, I'm getting confused in first value 38.
Okay. Why? I mean, what is your question here? Why 38 or?
Ma'am, first value will be 38, but in this net realizable value, second is 29 coming, same, ma'am.
Same. You're asking about Q?
Yes, ma'am.
Q has, I mean, what happened to the product Q is you purchased it for 29 and the market value right now, if you want to sell it also is 29 only. Okay? Then it will remain same, no? Whichever is lower, matlab, cost or NRV, whichever is lower. That's the formula. If both are same, then obviously the value will also be the same, no? 29 only.
Ma'am, you're saying if both are same, then the value of inventory will be same. If both are different, the first value will be the value of inventory.
Not the first value, whichever is lower. If you see, in the first case, P may kya hua 38 or 42, whichever is lower. Which one is lower? 38. So I've taken that. But in R, if you see 17 or 14, whichever is lower, I've taken 14. No, you can't say the historical cost only will be the value of inventory. It will be lower of both of them. Whatever is lower, that is only taken.
जो वैल्यू कम होगी वो कंसीडर होगी और जो सेम जो कम होगी वैल्यू वो लिए जाएगी और जो दोनों सेम होगी वो लिए
सेम ही
जाएगी.
होगा ना. हाँ, ये दोनों में कम वैल्यू क्या है? 29 में यहाँ भी 29 है, यहाँ भी 29 है. इस दोनों में कम वैल्यू क्या है? दोनों सेम है ना, इसलिए सेम होगा. पर इस दोनों में कम वैल्यू क्या है? 14 है ना, इसलिए हम 14 ले लेंगे.
तो इसलिए दोनों ले ली और तीनों का टोटल 81. थैंक यू मैम, समझ में आ.
ठीक है.
ये अक्षित था? अक्षित आप थे?
Yes, I think it is Akshit.
He has already given the exams. आप फिर से अभी तो रिजल्ट भी नहीं आया इनफैक्ट. चलिए. Yes, मैम आगे और queries. There are few queries. Hello.
Yes.
Yeah, please.
I think there are few people who are raising their hands. Arjun wants to ask something. Muskan.
It's okay.
Queries, we have it in the chat box, right?
Yeah. You can write in the chat box, or if you have asked, we have asked them to unmute. Muskan, you can unmute yourself and ask your query. Muskan? Arjun, do you want to ask? Arjun? Mr. Arjun? Okay, one of the student, Mr. Karthik, is asking something. Wait, ma'am, I have received that in the chat box that freight inward direct expenses से अलग कैसे होगी? How is it different from the direct expenses, freight inwards?
Freight inwards is coming under your direct expense. It is direct expense is just a heading which will it is like a category, we can say, direct expense. In direct expense, you will have lot of other expenses. Freight inwards is one of them. So direct expense matlab kya hai ki whatever is directly involved in your manufacturing, all those expenses are headed under direct expense head.
Yeah.
But in that you can have other details also, right? In direct expense, you will have freight inwards, you will have manufacturing expenses, you will have labor cost, you will have wages. All these are categories. But the head is direct expense, which includes all the expenses which are directly attributable in the manufacturing process. So direct expense is just a head, but there are a lot other involved in that particular thing.
Okay. So, students, we have come to the conclusion of this this class. I think, ma'am, the concepts have been all completed. Few concepts which is left for the next class, right?
Yes. And then we'll have to do the illustrations.
Yes. So
there's one concept, and then we can move to the illustrations.
Yes. So we'll be coming for the next class on Friday. Kindly do attend the next session. The chapter will be continued for the next class also. Okay. Okay. Thank you.
Thank you.
भार्गव जी
आप कंक्लूड कर दीजिए क्लास को. थैंक यू.